18 of 20 options contracts changed in one day. The jobs report hits before Friday's open. And our first complete outcome check just showed 2 triggered watches, 2 positive one-session paper measurements, and 4 ideas that stayed out of the market. Tonight, you get the full top 10 calls, the full top 10 puts, and 3 price maps for Friday. No prediction, no chase. Just what changed, what has to happen next, and when the best decision is no trade. The broad market barely moved Thursday. SPY slipped about 0.15%, QQQ about 0.39%, and IWM about 0.5%. Under the surface, the session was violent. Honeywell Aerospace fell more than 23% after results missed expectations. AppLovin lost nearly 20% on mixed results. SpaceX gained more than 6% as a lockup expiration changed the supply picture. That is the first lesson. The biggest moves usually start with a catalyst and expectations gap, not with a mysterious chart pattern. The chart helps us manage the reaction. It does not manufacture the news. For regular people with regular jobs, the repeatable preparation is simple. Know the event clock. Record the prior high and low. Let the first reaction establish a range. Then require price confirmation and a usable option market. Missing the first vertical candle is not failure. Chasing it without a plan is. Now the accountability check. We finally have exact Barchart bid observations for every due contract. 120 records, with no estimates and no missing rows. Tuesday gave us 6 close watches. But a ranked watch is not automatically a trade, so the conditions come first. American Airlines needed the stock above 16.40. That condition triggered. The September 18th, 17 call measured plus 25% at the one-session checkpoint, from the frozen scanner ask to the exact observed bid. NVDA needed the stock above 208.70. That triggered too. The September 18th, 220 call measured approximately plus 25.7% on the same conservative basis. Novo Nordisk and IonQ were blocked through scheduled events. Their raw immediate entry measurements were negative, but they were not trades in the published plan. NVIDIA's 195 put and SOFI 17 put never triggered. Their negative raw measurements were also no trades. So the honest scorecard is 2 triggered, 2 positive paper measurements, and 4 no trades. Encouraging? Yes. Proof of an edge? Absolutely not. Is 6 ideas in one session. The wider raw scanner sample is a warning against buying ranks blindly. Only 23 of 100 immediate one-session observations were positive, and the average was negative after ask-to-bid friction. The trigger and no-trade rule are not decorations. They're the part we are testing. Now the complete master list. Every contract expires September 18th, leaving 42 calendar days on Friday, comfortably beyond our 28-day minimum. The data is frozen Thursday evening, not live Friday pricing. The call board is number 1, NVIDIA 230 call at 7.95 observed ask. 2, PG&E 18 call at 77 cents. 3, Transocean 5.50 call at 27 cents. 4, Broadcom 450 call at 20.20. 5, Cameco 100 call at 4.10. 6, NextGen Energy 11 call at 60 cents. 7, Neo 5 call at 25 cents. 8, Rayonier Advanced Materials 10 call at 50 cents. 9, Palantir 165 call at 7.05. And 10, American Airlines 17 call at 77 cents. The put board is number 1, SOFI 17 put at a 72-cent observed ask. 2, SBCX 105 put at $8. 3, PG&E 16 put at 62 cents. 4, Circle 60 put at 5.40. 5, MP Materials 45 put at 3.55. 6, Celsius 22.50 put at 1.09. 7, Robinhood 85 put at $5. 8, Ondas 8 put at 85 cents. 9, Mara 10 put at $1. And 10, Strategy 90 put at 6.10. Only 2 exact call contracts, Broadcom 450 and Cameco 100, survived from Wednesday's board. No exact put contract survived. That is 18 changes out of 20. This does not mean the market changed direction 18 times. It means contract price, liquidity, volatility, and positioning changed enough to reshuffle the research board. A rank earns attention. Friday's price action still has to earn the setup. Friday's main event arrives at 8:30 a.m. Eastern, when the Bureau of Labor Statistics releases the July employment situation. Consumer credit follows at 3 p.m. Eastern from the Federal Reserve. The jobs report lands 1 hour before the opening bell. That means an overnight option position can reprice before a normal stop order can help. Friday expiration can add intraday noise, but our featured contracts are September 18th, not zero-day contracts. More time reduces the urgency of expiration. It does not remove gap risk, premium risk, or a bad spread. My rule for Friday: do not decide the direction from the first headline. Let the indexes and the stock show whether the initial move holds, rejects, or becomes a range. If the reaction is disorderly, the plan is wait. The best continuation watch is NVDA. It closed at 218.99 after trading between 217.34 and 223.56. The contract is the September 18th 230 call. Its observed ask was 7.95, with 7,930 contracts of volume and 32,944 of open interest. One contract at that ask represents about $795 of premium before fees, all of which can be lost. The underlying trigger, not the option price, is above 223.60 after the jobs reaction establishes an orderly range. I want a hold or controlled retest, not a vertical gap that leaves no structure. The invalidation is below 217.30, just under Thursday's low. No trade inside the prior range. No trade if NVIDIA gaps above the trigger and never retests. No trade if the live option spread or liquidity fails the Friday check. Reddit discussion is split between a breakout and more jobs report chop. That is useful only as a reminder that the crowd has no agreement. The verified range, not the loudest post, sets the decision. Bull case, accept above 223.60. Failure case, lose 217.30. Everything between those levels is information gathering. The best reversal watch is SOFI. It closed at 18.10 after trading between 17.87 and 18.485. The contract is the September 18th 17 put. The observed ask was 72 cents, with 6,342 contracts of volume and 13,047 of open interest. One contract represents about $72 of premium before fees, but a small price does not make an option low risk. The bearish trigger is below 17.85 after the opening reaction. The setup needs acceptance below the prior low, not a 1-minute dip and immediate reclaim. The invalidation is above 18.50, just beyond Thursday's high. No trade if SOFI stays inside the prior range. No trade if it reclaims 17.85 immediately. And no trade if the option market becomes disorderly. The Reddit mood is divided. Optimism when the stock holds above 18, frustration when it rejects the high 18 area, and plenty of people choosing to wait. That debate supports only one conclusion. Price must confirm. Below 17.85, the downside study becomes active. Above 18.50, the reversal thesis is wrong. Between them, patience is the position. PG&E is the two-sided watch because it ranks second on calls and third on puts. The stock closed at $17, with a Thursday range from 16.94 to 17.38. PG&E recently reported higher second-quarter earnings and reaffirmed full-year core earnings guidance, while wildfire liability reform remains part of the company risk discussion. Above 17.40, the bullish study uses the September 18th 18 call observed at 77 cents. Below 16.90, the bearish study uses the September 18th 16 put observed at 62 cents. Between those boundaries, there is no trade. Transocean is post-earnings, so the 5.50 call needs extra event reaction caution. Broadcom's 450 call carries a 20.20 observed ask, about $2,020 for one contract before fees, so its high premium is a risk flag, not a status symbol. The board can surface both directions. The range decides which side, if either, survives. Here is the Friday checklist. First, let the 8:30 jobs reaction happen. Second, mark the opening range instead of chasing the first candle. Third, require the underlying trigger. Fourth, verify the live option price, spread, volume, and open interest. Fifth, accept no trade when the conditions never become complete. Comment the ticker and boundary you're watching. After the close, we will freeze the data again, record what triggered, record what failed, and show the misses with the hits. This is educational research, not personalized financial advice. Options involve substantial risk and can expire worthless. Verify live prices, liquidity, events, and suitability before making any decision. One lesson, one ranked watch list, one disciplined process. This is the best chance daily, professional level tracking for regular people with regular jobs. I'll see you after the close.